The economic data is not good out of China, but we kind of know that and expect that given the fact that the government has been so actively seeking to lock down its economy due to COVID concerns. Is China in a position at all to make any kind of a decent economic comeback in the coming, say, 6 to 12 months if COVID still becomes an issue? We're heading into the winter months now.
You know, the next 6 to 12 months, well, the first 6 months are going to be pretty tough. I think there was a reasonable expectation that the second half of 2022 was going to look better than the first half of 2022. But as we've seen, because of COVID zero largely and the repeated lockdowns, which of course have broader macroeconomic effects, we're going to be finishing off this year on a pretty sour note. Now, what are the factors that investors need to be looking at as they think about the next year from this point onwards? Does COVID zero go away? I don't think there is a case to be made that COVID zero is going to be scrapped altogether. The underlying conditions have not been met for that. And then the second one, of course, is what happens with stimulus. Is China going to roll out big stimulus, fiscal stimulus, or additional monetary stimulus? I think the chances of that also don't look particularly bright. So I would think slower pace of expansion and a much weaker economy than we anticipated, even if it looks better than 2022. That should be expected.
So slower pace of expansion and an economy where rates are getting cut, the currency is weakening. What's to keep people from saying, you know what, I don't want to be in China anymore. Let's go somewhere else, because even if the U.S. looks relatively bad, it's still better than China.
Yeah, look, I mean, if you're talking about equity markets, you may be seeing more and more of that. Some folks might be able to find opportunities, pockets of, strength, but that could very well be the case. Of course, the larger question is, for corporates that are looking at China, that has to be a long-term play. The Chinese economy is going through very clearly a period of transition. Now, transitions are very uncertain. Transitions can be very, very messy, and we'll see how policy continues to evolve. So this is about whether are you trying to make a long-term play for China or not. That's what it really comes down to at this point in time.
You know, Shehzad, FedEx CEO Raj Subramaniam made a lot of headlines when they pre-released their numbers. We're kind of getting the formal stuff later on this week. But during an interview with Jim Cramer on Mad Money, Subramanian explicitly talked about Asia and China as being like the manufacturing hub of the world. So if they see weakness there, they see it everywhere else, which is what led him to that call of a world recession coming up. Is China going to export its problems economically to the rest of the world? So in other words, if China sneezes, are we all going to get a cold?
I'm not sure that's on point. Number one, I think if China's manufacturing sector is struggling, well, that's telling you that there is softness elsewhere. As a matter of fact, China's economic revival throughout the the COVID era, 2021 and so forth, 2022 and 2020 was driven by the fact that there was strong demand in the West, which helped the Chinese manufacturing sector. So I think we need to get the relationship right over there. Number two, there is incredible weakness in Chinese domestic demand. We all know that. But the reality is that China isn't exactly the biggest consumer of global services. So will foreign service providers be hit that hard by Chinese domestic weakness? I'm not sure about that. I think China's economic weakness will ultimately affect, of course, a commodities market. But let's not forget, that's actually a positive story for global inflation. So I think we need to look at all sides of the picture here when we think through what the broader market implications of Chinese weakness in this current period could be.